Good morning and welcome to our webinar on peer-to-peer insurance and the response to COVID-19. This is part of a series of webinars that we've been doing that focus on specific innovative responses that leverage insurtech. And we're very pleased to have with us today Tang Loaec, who is a specialist in peer-to-peer insurance, P2P. And I'll be introducing Tang in a second, but just before we begin, I'd like to go through some housekeeping items. First of all, our expert forum today will last no longer than 1 hour, including Q&A. Please feel free to use the Q&A box at the bottom of your screen to submit questions during the presentation. I'll be fielding questions and guiding them to Tang as we speak. And I just realized that my video isn't on, so sorry about that. Also, if you do want to speak, please use the raise hand icon to speak. You will be on mute, and that's to ensure the highest quality of experience for everybody. But of course, we can unmute you and enable you to speak live should we see that you have raised your hand. Also, as usual, slides and a recording of the presentation will be circulated later, and any questions left unanswered, we will aim to answer via email after the event. If you have any technical issues during the webinar, please message the MiN executive team. You'll see there's one attendee called MiN executive team using the chat. And Hugo or Azier, who are in the background, will get back to you and try and help you out. Okay then, well, without further ado, I'd like to introduce you to Tang Loaec. Some of you may know him. He participated and spoke at our consultative forums in 2018 in Singapore, Sri Lanka, and Ghana. Tang was the founder of Chongju Bio, which is undoubtedly poorly pronounced, in China, and this was a precursor in peer-to-peer insurance and inspired the models that are now being implemented by Alipay and Tencent, providing insurance services to hundreds of millions of users. He handed the control of this venture to a Chinese group late in 2016, and Tang continues under the P2P Protect brand, now based in Europe, to spread collaborative insurance models, either in a consulting or an advisory capacity for startups and insurance groups, or to help seed new entrepreneurial projects. He's been studying the insurance response to COVID-19 since its emergence and has been advising a number of initiatives seeking to build peer-to-peer responses to the pandemic. And so we thought it would be really helpful and interesting for our members to learn more about, first of all, the information that Tang has managed to collate in terms of the response to COVID-19, and then specifically more about how peer-to-peer insurance is being used to deal with responses. So without further ado, I'd like to hand over to you, Tang. The floor is all yours.
Thanks a lot, Katharine. It's very nice to be able to talk with the Microinsurance Networks again and to meet you again. Well, the seasons and the confinements force us to do it on a distance, so I'll be very happy to go this way. Let me, without more delay, plunge into the subject with some things that all of you know. So I will not be detailing more information on the scale of the pandemics. You all hear about it every day. Those figures are provided figures from 2 days ago, so they are already not accurate, but 5 million cases globally, more than 300,000 deaths, and growing. We all know where it's standing. We all know also one quite surprising factor, which is that it started in China, but China has been, whatever is said about the accuracy of the figures, it has been able to contain it very significantly, as well as most other countries in Asia, and it has been scaling a lot when reaching Europe and the US. Whatever are the detailed explanation for this, which is not my topic. It has been generating insurance gap. Any new threats is revealing numerous new insurance gap. And in this case, we have a variety of needs, which are going from hospital and medications to death or invalidity, a lot on the loss of income for for small and medium enterprise or for salaried people. There is, of course, a catastrophe in the travel and rental industry as industries, but there is also gaps which are not covered for the user of the travel and the rental industry when they had to cancel their booking. And there is also a lot of specific case in mobility, things not only about mass transportations, but about individual transport, such as a taxi or Uber-like services, where the drivers of those Uber-like services are both exposed and exposed in terms of sickness and exposed in terms of loss of income if they cannot operate. The last things maybe on this slide is to distinguish between mature market and emerging market. Mature market, or at least Western Europe market, have been sometime answering some of the insurers I've been talking to that the hospitalization and medications case was mostly covered already, and they just felt that they don't have anything to do anymore. Obviously, when you are turning with emerging market with a low medical coverage, the situation is very different, and all the rest of the gap are largely not covered in terms of travel and hospitality industry, loss of incomes and mobility. Oh. So claim control. Yes. So you've been seeing this map already because it has been shared by MiN, which is a map of some of the result of a market research that we're conducting at P2P Protect on a rolling basis since the emergence of the epidemic. Even so, this information is not complete. I mean, the space on the slide was too small to put every cases. First, we may have missed some initiative because there is no new initiative every day. Second, there are cases where which are in the full studies, but for example, we didn't identify on this map India, and there are several cases of insurance against COVID which have been developed in India. Just at some point, if we pack more things on these slides, nobody will be able to read anymore. Nonetheless, what is very easy to see is that you have a high prevalence of insurance coverage being rolled out in Asia, more than 60 in China. By now, we're probably more than 70s rather than more than 60s. More than 13 in Thailand at last times we checked it a few weeks ago. More than 20 in Singapore as well, a lot in Hong Kong. Asia has been, in terms of insurance industry, reacting very fast to roll out COVID insurance coverage. So there are several reasons for that. Well, in Europe or in the States, there is still very little at this stage, even if it's starting. Very simple explanations. First, Asia was ahead in the curve of the epidemic, so they started to have to answer to those questions 2 months earlier than the European insurance industry or the American insurance industry. Second, Asia have experienced the scare of previous epidemic from the SARS, so they were kind of more ready. Third reason is that if you put aside Japan, but most of the developing country or emerging country in Asia still have only a partial medical coverage. So the need is kind of much stronger on this first element of insurance coverage than in Western Europe, for example. And the last, but maybe not the least, you have very agile cultures in terms of business reactions in Asia, which lead to responding faster and a bit less corporate slowness in in defining the response. I'll go through a few specific countries, but very rapidly. So my apologies. I forgot to translate this slide from French to English. I'm sure everyone still can read it, but anyway, there is two important messages on this. If I put aside the top part, which is there's more the tech innovations related to diagnostic of COVID, the important message is that there are a lot of insurance having launched insurance coverage, more around 60 of them. But there is also, and that's very interesting, new peer-to-peer scheme being launched to protect against COVID. I mentioned three of them there somewhere in the middle of the slide, being the program of Retihutsu, which is a 30% Tencent invested company, of Xianhupo, which is a 100% and financial Alibaba Group invested company, or smaller one like the one on the bottom, Tang Loaec, which is an independent peer-to-peer. I was going to say insurers, but in China, they are not insurance regulated. They are non-insurance, and they call themselves mutual aid. The regulator tells them that we don't prevent you from doing what you want, but you shall not use the word insurance nor give the impression that you are an insurance regulated company. That's the way for the Chinese insurance regulator to allow still to have innovations just by keeping it outside of the scope of its responsibility. So that's one case in China. I'll mention Thailand rapidly as well. Thailand's was one of the first insurance being launched out of China. But at the beginning of March, when I first checked, there was one COVID insurance being in place. Now, at the end of May or mid of May, there was already 7 million policies of COVID-19 insurance coverage being sold by 30 different insurance companies. So not only there has been a lot of initiative, but there has been a very strong intake by people wanting to protect themselves, up to the points where the insurance industry is starting to reduce the distributions of deaths, COVID-related deaths insurance policy to avoid some excess in the intakes, such as people taking several death insurance from several companies. So in some countries, like in Thailand, it has been hugely popular. One more country case, the one of Japan. So Japan, it's very different. There is, at this stage, we identified only one case of peer-to-peer, one case of COVID insurance being launched in Japan. At the beginning of March 9th, I was interviewing one of my friends, Kaziata, who is the co-founder of an insurance company in Japan, just in case, and he told me, well, for COVID-19, there is not much moving here. As far as I'm aware, it would be too risky for an insurer to do anything here, besides they are slow. So we are hearing for Japan exactly the same answer, which could be relevant for some Western insurance company as well. But then 1 month later, he himself, he has a regulated insurance company, but he has also launched, he's more a startup, and he do some peer-to-peer as well, but he didn't use peer-to-peer, he just launched an insurance product on COVID 1 month later. So while the classical insurance company have been slow moving, this small amounts insurance company, which is regulated, have been able to launch something in 1 month. And just a last slide, and then I'll give a bit of space for Katharine to ask me a question, or for the floor to ask questions. Just a case about Italy. And during the past months, initiatives started to appear in Italy as well. So what we see is that with this, it's a bit later on the curve, but still the earliest country in Europe having a massive emergence of COVID cases is starting to roll out the initiative. And I mentioned 3 of them here. One is generally is more doing some group insurance for COVID for employers. But the other two, you can see on the right something which is written in Italian. So don't worry, even I cannot read Italian either. But this was built by Mansuti, which is an insurance broker, and proposed to insurance companies. So that's a COVID insurance. And in the middle lower part, you see the mention of D3P. So D3P is something which is not launched yet, but which is just one hackathon organized by European Union called the European Unions Against Virus. And they are building a peer-to-peer solutions against COVID, which is also an interesting case. So we can see that both in China and the peer-to-peer reactions to COVID is relatively rapidly, and we'll speak about why later. But I think that before we speak about peer-to-peer, let's make a pause and let you, Katharine, take the floor.
Yeah, so a couple of points, Tang. I'm not sure that everybody on the call is familiar with the usual peer-to-peer model, if I can use the term usual there, but could you just take a minute to summarize what the key elements of that for those that are not familiar with it?
Well, I'd be happy, but this will launch me into the second phase.
That's okay. Okay, all right. Well, but just very briefly in a nutshell, and I'll stop you with that. I have a couple of other questions.
Okay, so in a nutshell, peer-to-peer is a model where you bring people, individuals, to share risk between themselves. So it has an element of disintermediation, which can be partial or total of the insurance company. But this is kind of going back to the roots of insurance when Italian ship owners were getting together in a city so that if one of those, their ship, which was going at the other end of the world, was sinking, then they will just all help so that the merchants can buy a new ship. So that's the origin of insurance. But nowadays, insurance in most places is very regulated. And instead of being people protecting each other, it's a regulated company, the insurance company, which is guaranteeing the risk for individual. So we've moved from sharing to guarantee for insurance, and peer-to-peer try to make the opposite move from guaranteeing back to sharing for many reasons, which I will explain later.
Thanks so much. And you touched on another point, which was a question I was going to raise. Now, you mentioned that in China, the regulatory authority has taken the view that as long as peer-to-peer platforms don't refer to themselves as being insurance, they can operate pretty nimbly because they don't have to go through the regulatory processes. And again, that example in Japan, where the option was to use peer-to-peer going through the tech platform for precisely the same reason, because it takes a long time to get products regulated. So to what extent has the relatively swift reaction of insurers in some of the Asian countries been due to changes in the regulatory frameworks that may not require them to go through the same steps or processes that is the case in OECD countries?
In China, I've mentioned more than 60 cases, and out of those, probably 70 by today, and out of those 70, you have 60 which are launched by insurance company and 10 by peer-to-peer models. So what we can see in China is that in both areas of the industry, both the regulated one and the non-regulated ones, the answer has been brought because we had also regulators and the governments which were feeling the need that some things could be launched to protect the population. So they have been facilitating in this respect, if not pushing to do it. In Japan, that's an interesting contrast because this is an OECD country. The Japanese insurance regulator don't have the reputation of being an easygoing fellows. They tend to be rather strict as well in general. So that's an interesting case because they finally authorized a peer-to-peer scheme. So it's not the COVID one, but another which is against cancer. So that's pretty close on a peer-to-peer basis. And they finally decided to go for a sandbox approach to authorize it. So that's interesting variation for a regulator, which used to be very controlling to allow this to happen, which is not the case in every European countries to date. So at the same time, I totally agree with you that there is a questions of being nimble and of acceptance of agility, but still we can see cases of this agility not being only a matter of regulated industry, not regulated industry, but of, on one side, on a wider mindset in many Asian developing countries. And in the case of Japan, it's I think it's just a strong perception of the need and the need to find innovative response, even if they have not been, I wouldn't say they are nimble, because it's one case of product in Japan, while there is more than 16 in China, more than 13 in Thailand. So comparatively, it's still a much lower rate of doing it, but at least they have permitted it.
And then just very briefly, in the Italian slide, there was in the middle, there was this, the name of the organization of the product was D3P. What does D3P stand for?
Okay, so the real name of the organization is Datafolio. It's a startup which is working on data, IoT, and insurance, founded by a very senior insurance executive. But on a startup mode. The D3P is standing for, well, Datafolio peer-to-peer, I suppose, or maybe Datafolio peer-to-peer protection.
Right.
They have not disclosed the meaning, but I think that's what's
great. And we have a question that's coming from Lisa Morgan from the ILO's Impact Insurance Facility. And Lisa says that she draws attention to the point that insurance and all risk pooling mechanisms rely on large numbers of members. So she'd like to know, Tang, in your experience, whether you're able to reach the scale necessary to make P2P viable, and what you think is the minimum number of people needed, and what sort of socioeconomic groups opt for P2P protection.
All right. So I remember one of my early cases of discussion with an actuary consultant in China when I was launching my own model. And his answer was that if you have a bit of homogeneity within the groups, above 1,000, the law of statistics start to apply. But of course, they apply with variability. So the lower the number, the more you buffer you need to cover statistical variations change. In practice, I will say that whenever you can feel comfortable going above 10,000, you have something which is really robust. So you have two approaches to launching peer-to-peer. You have the small groups approach, which say, okay, it's just a group of friends and will be 10 or 15. And it's allowed to share a bit of the risk, but this is not sufficient to ensure safety. It's just everything spreading. So if you are within a family, that's totally something which is acceptable. Someone will have an accident, I'm ready to give him a very huge amount of my own capacity to contribute for this. But if you're with people with whom you have only a very tiny relationship or not at all, you need to have a division which is much bigger. So when you launch programs, there are, for me, and you can have different answers depending on the type of risk, the amount of the coverage. So there is not a one for all answer, but it may be prudent to have a initial no claim period as long as the community didn't reach a certain level. This level probably should be at a minimum of 1,000 if you want to ensure that the risk is well spread, or you need to have a different mechanism where you have small groups which share a layer of the risk, but you still have a kind of a second layer of reinsurance, one way or the other, behind to cover the strong variations. And when I'm saying 1,000 as the minimum level for this to be triggered, it's on the logic that when you reach 1,000, you can know that you are on the trend which can go much higher. So I would not have any kind of concerns if we are around 5,000, 10,000. It's usually really sufficient to cover any risk. In all the experience I've been running myself, this was more than sufficient. But if you are 100, you still have a significant risk, so you need to have other mechanisms to cover.
And in terms of what kind of socioeconomic groups opt for P2P protection, what are your thoughts on that? And that relates to whether or not you see emerging consumers using it.
All right. You have two things in terms of what type of product you're launching. So if I go to my initial attempts in 2014-15 in China to launch it, the first risk coverage I've been launching is protections against divorce. So this is leading to a certain number of profiles, but the main answer there was we want to have groups of people who are newly married, not people who are already married for 7 years and looking for already for solutions to get out of it. But if you think, for example, about well, you have something very important to define is what's your purpose in having those communities? Is your purpose to have more homogeneous community so that the risk will be reduced by having only people related to you and not high-risk people? That's one of the motivations you can have. You can have community which are on the contrary made to cover people who cannot access to protections anymore. Maybe possibly because you're 60 and older, so you will be rejected by a lot of different insurance companies, but still you can still use it on the condition that you are a group which is the same type of people, presenting the same risk, and you're sharing equitably the risk among you. But then I would have also some models which are very different, and that's the case in China with the huge groups that they have with tens of millions of people in each group, where the point is to have something which is basically which is extremely diversified, and where the different type of risk profile are kind of balancing each other. So that's a matter of philosophy, and what is the philosophy you want to push. And it could be the same to some extent for insurance. Mutual insurance tends to want to have less risk-based pricings than some innovative insurance startup. So if you go back to peer-to-peer, some actors have been trying to use the model to have very homogeneous risk profile groups for financial benefit. And you have others which have larger community with an approach which is driven by solidarity.
And in terms of socioeconomic status or income groups, is peer-to-peer generally taken up more by people who are more affluent or less affluent, or is it impossible to say?
The most successful case have been for a very large group of non-affluent people who had less access to certain type of medical coverage, for example, and who have been able to use it because it's also a way of organizing the risk coverage, which is usually, at the end of the day, less expensive than a regulated insurance model. You have a bit less of regulatory obligations related to it. You have a bit less of cost of operations related to it. So I would rather go to the mass market, popular, underserved populations very easily. You don't have to concentrate only on this, but it's certainly a good way to approach those populations.
Okay, Lisa's really interested in all of this, so she's asked one more question, but I think before we address that, let's go through the next section of what you've got to say, which might answer the question that she's just raised.
All right, so you received already the infographic about COVID, so the next one I'll be sending to you, Katharine, tonight or tomorrow. Is the one about peer-to-peer insurance around the world. So coming back to peer-to-peer insurance, the key values in peer-to-peer insurance is a mix, something which is built around community, new technology, trust, and transparency. It's developing as a global phenomenon here. So I put some of the models on the map, enough to see that there is a wide diversity in a wide range of areas. Same caveat as for the previous infographics. Everything is not on this map. I have people who are in the process of launching a new peer-to-peer model today. So some of them told me, yes, you can speak about it. Some of them told me, hey, please, we want to stay under the radars for a few more weeks or months before we are visible. So it's not 100%. But you have case here around the world. You see big box in China, which is clearly the world leaders in terms of peer-to-peer model. You have a lot of models which were launched in France, sorry, not in Europe, knowing that you have different models in different countries. One which is strangely not appearing here. Yes, it is. On the top here under Germany, you see Friendsurance. Friendsurance is kind of the granddad of peer-to-peer insurance nowadays, which means that it's 9 or 10 years old by now. And they have only a partial peer-to-peer models in my eyes, but they really showed the way in terms of attempts to rebuild a peer-to-peer based model, a collaborative model. So that's something interesting. Tang Loaec, I won't detail everything. If some of you around want to have more information, more discussions about peer-to-peer model, how to build one, etc., don't hesitate to contact me after the sessions through Katharine or directly. I'll be happy to say more. Back on the different model for protections. I should not say different models. It's a different models from insurance. That's what this title was meant to say. So traditional insurance, you see it on the left. You have one actor in the middle, which is the insurance company. You have clients on the periphery, and the insurers is guaranteeing the risk of the customer. In fact, the mutual insurance models which have been developed, so the classical one which are developed, is not so different from the traditional models. It's very different in the fact that you don't have a capitalist owner of the insurance company, but the insurance company is kind of owned by all its customers. But still, the model of organization of the contract is the same. You have the insurance, even if it's mutual insurance in the middle, guaranteeing the risk of the individual. When you move to peer-to-peer risk sharing in the middles, you don't have anyone in the middles anymore. You have every member protecting each other members in the community. So there I put 4 nodes because my design capacity is limited, but as we have discussed, it would be much better to have 10,000 nodes here in this graph, or tens of millions of them, as is the case in China. On the right side, I've been attempting to make a graph for the peer-to-peer brokerage model, which is the one which has been used by Friendsurance, so the granddad of peer-to-peer insurance, as I mentioned, but by a lot of other actors in Europe as well, like otherwise in French, for example. There you have the peer-to-peer insurance company is not an insurance company, it's a service provider. It has a brokerage license. So it's bringing together a community of members who have a strong homogeneity, either because they know each other or because they are the same profiles. And what will be usually the amounts, well, when you have a car accident, you have an amount that you have to pay yourself before the insurance is taking the rest. So this is this amount which is being shared between the members. And this way you can negotiate to the insurance to accept that the amount not covered, the deductible, all right, I got the amount, so that the deductible can be bigger because the deductible will be shared between the member of the peer-to-peer community, so that the insurance coverage of it will be reduced, because the bigger is the deductible, the more you can reduce the premium. So that's the way this model is working. So it's not pure peer-to-peer, and it's navigating on something which is partly regulated, because it's still insurance and insurance brokerage, with the layers of risk sharing, which is on the deductibles, which is maximized. So that shows the real model difference in the construction of the model. Did I? No, I didn't launch my my times, my stopwatch. So I don't know how much I spoke already in the second phase. I'll just continue a little bit. That's some selected products. So in North America, in Asia, in Europe. One interesting thing about North America is that Lemonade is not a peer-to-peer model. Everyone speaks a lot about Lemonade as being a leading insurtech, and they are great. When they started to work on their models, they thought about peer-to-peer, and then they launched a classical but very tech-intensive insurance company with a bit of for the good elements, with returning excess to different costs. But you found that you have peer-to-peer models in North America, in the States, and they are based on confessional models. So you know that America has a lot of different Christian church of different groups, and several of them have been launching associations to share health protections, health coverage within their community. So you also have some peer-to-peer model in North America. So Asia, Europe, we don't need to go too much into detail, but just a little focus on the emerging peer-to-peer models. So Datafolio is the one I just mentioned, the D3P you asked me about, Katharine. And they have a model which is peer-to-peer, leveraging Internet of Things, including geolocalizations on mobile app, and with a focus on mobility and the movement of people, to be able for people having prudent behaviors from a mobility base to have a reductions of their of the share they support. So it's trying to craft into the model some incentivizations to have a prudent behavior, reducing the risk for all the community. So that's an interesting approach. Just below, you can see one which is called Sagittae, who's incorporated in the Netherlands. And they have a model which is interesting as well, because first it's been built partly on blockchain. You have a series of different P2P initiatives leveraging blockchain to do it, and that's a workable solutions to peer-to-peer. I'll mention them because they have a platforms which can be used to support a lot of different third parties community, bringing a community as a sponsor to be able to bring peer-to-peer to those communities. So they have a kind of a peer-to-peer as a service type of a model. And that's something which, if you want to use their models, can be a good way of rolling solutions for a community without having to build everything. So that could be interesting also. And on the bottom, I've mentioned Pineapple Insurance in South Africa. So you have one actor in Africa as well. If I don't know if our friends from Senfree are around to speak about it, because they are closer to them. I'll have a discussion with our founders probably next week or the following one. So it will be for the next webinar, the details of how they are doing it.
Tang, if I could ask you just a question from Rishi Raitata from GSMA. And Rishi would like to know, we're speaking a lot about the models, which is really, really interesting. But what Rishi would like to know is whether you're seeing bundling of the risks covered. So scaling insurance for the underserved often works well when it's bundled or cross-sold with other services. Selling hospicash, you know, combining hospicash insurance with funeral insurance or funeral with index. Is that possible with P2P models? And also, would you be able to distribute P2P amongst underserved populations that do not have smartphones?
Right. So bundling is always possible, but if I go a bit more into in the third part on peer-to-peer, I will insist on the fact that a benefit of the peer-to-peer is that it can allow to give a great transparency to the community. So of course, when you're bundling too much things together, that's something which can be understood by brilliant actuarial minds, but becomes less and less intuitive in terms of understanding what you're paying from. So that's the limit of bundling in classical insurance product. And while you can bundle also different type of risk in a peer-to-peer model, it has this inconvenience of making it less understandable to the general public. So that's for the first part of the question. The second part of the question is in terms of distributions. And then I'd like just to go to this Know It Scales slides, which is, in this case, the case of Alipay and Xianhupo, because it's talk a lot about distributions as well indirectly. So Xianhupo and Alipay were not at all one of the precursors in peer-to-peer in China. They are really one of the latecomers. You had a great precursor which is still active in China, which was called Microinsurance. And during 2014 and 2016, until I sold my company, I had another of the precursors models at the same times. Alipay started in 2018, taking over most part of the model, but adding real great additional twist on it. So the first one is, of course, well, they apply it within their own ecosystems. And as you know, they plug it onto their payment wallet, Alipay, within the Alibaba ecosystem. So they have the brand trust, which is there. They have an ecosystem which is between 600 to 800 million users in China. So of course, it's reduced a lot of the element of scaling. But the thing which was also very incremental in making them spreading and growing even faster than an equivalent models, which was launched by Tencent on WeChat, the Chinese social media, is that they have been they plugged it on their payment wallet, and they facilitate the usage through using a payment wallet. So coming back to the question, that's smartphone mostly for Alipay on Chinese smartphone, because everyone has a smartphone. Even the beggars have smartphone today in China. There is a funny photo pic which is circulating in Chinese social media of a beggars in the street of Shanghai, and he has a big card box with a QR code, so that people, instead of giving him coins, will just scan the QR code to transfer money on his WeChat or Alipay account. So very funny, but what do you do when you don't have a smartphone for a large part of the population? That's a great question for part of India. That's a great question for part of Africa, of course, and many other areas. We have, so it's just an initial, first is even on things like M-Pesa or Orange Money, which are payment solutions which can function on the classical, the old digital phones that are still being used. You could build something, but of course you have a bit more limitations in terms of the quality of the interface, but you could still build it as long as it can facilitate payment on the phone. The second thing is that I've started a discussion, so we're still in very initial phase, but I started discussing with operating systems called KOS, which is designed to deliver more internet functions to non-smartphone mobile phone as well. So that's something which we're discussing with them, because we're thinking about a use case for peer-to-peer, which could be, how can we develop a use case for Africa or for other areas, or how can we help people who are more directly involved in those areas build one. And that was one of the questions which we had to answer. Okay, even if you have 50% of the 40% of the population with smartphones, what about the other 60%? And that could be a solution. KOS is an operating system which is distinct from iOS and from Android, and which is made on purpose to be able to be plugged on the traditional phone, or traditional mobile phones, to enhance their capacity. So we will be studying how we can embed a peer-to-peer models in those classical phone as well.
Great. I do go on with the presentation, Tang. Thanks so much. We'll come back to Rishi at the end. He has another question that he'd like to ask live, but let's carry on for now.
So yes, a few use cases. So just to show in the slide, this one is the one of Sagitae, the blockchain platforms as a service that I mentioned. I talked to it about, so I'll move directly. So that's history. That's my case. But what was interesting is that the usage of peer-to-peer to address very innovative social protection case. We run communities on divorce protections, on child kidnappings, on ID laws for migrants, which is a specific issue in China. So you can leverage this model to do very unusual type of, to cover unusual type of insurance gap, which are usually not covered for insurance. The biggest, most successful models, and not only for Alipay, but for many others, is related so often to critical illness, which is a natural application of this in emerging or developing countries. So why is peer-to-peer relevant in a COVID-19 context? I think that's something which is useful to address, because the problem of COVID-19 and the reason why insurance are sometimes slow to react to it is that defining upfront the adequate level of premium it's not impossible, but it's made more difficult. It's made more difficult because you have no coherent set of data which is proven by history to forecast reliably the infection rate. And even from a country to country basis, the consistency on the reported fatality rate is very different. So as the real fatality rate is extremely different, or the reporting approach are different, but in any case, for an actuary, it leads him to scratch his head. The third thing is that there is a high dependency on government policy decisions. So the rate of fatality is so much dependent on something that, as an insurer, you cannot forecast reliably, except if you believe that all political decision makers are reliable, but well, opinion may diverge on this, and depending on countries. And the last thing is that there is also a high dependency on behavioral elements. So the government's decision is one thing, but the other thing is how much the decision is implemented by people on an individual basis. So all this makes it difficult to have a really reliable actuarial predictions. But when you move to a peer-to-peer insurance mechanism, the peer-to-peer insurance mechanism is a sharing mechanism. So you share the real risk being occurred. So if you've collected deposit at the beginning, you return them. If you have not collected them, you'll share as you go. But the amount of the risk is adjusting exactly to the progression of the pandemic. And there is even a behavioral shaping element in having to share the cost within the community, is that you see what's the impact of your decisions as soon as it materializes. So it can also influence the members of a community to behave more responsibly as soon as there is an evidence that this is hurting directly them financially, on top of helping them from a health point of view as well. So that's a few of the reasons why peer-to-peer is well positioned to answer COVID risk. I had questions related to Africa, so I have was just wanting to share, but we'll do it rapidly because we're getting to the end of our time. A use case for peer-to-peer Protect, which I call here P2P Protect Africa, because we develop it in a mindset of doing something for Africa, but it can be adapted to other case. So the idea is protecting together. So you have to push the case of honesty and transparency. You could have a COVID cover, or you can have a COVID and other pandemic cover. That's one of the questions we're trying to decide upon in Africa. COVID is a real worry, but for the time being, it has a much lower lethality than cholera or Ebola or the measles in some part of Africa. So the issue is, can we bundle it at least with other sickness of same epidemic nature? So that's bundling, but bundling among things which are still quite similar in nature. Then you'll have to have a solution of a coverage for hospitalization per day and a coverage in case of death if you want to protect the family of the deceased. The second part of it is that you need to find on what you are plugging your models in terms of payment, because area like Africa, or at least huge part of it, are underbanked. So you cannot count on people to make you just wire transfer from their bank accounts to a central account, right? So you need to be able to plug it on a mobile payment wallets, which could help you to have a very efficient money transfer mechanism which is embedded. And I will say that the last point is how to organize for the community. And I think this will be my last slide. You have to lead people to choose their community. So you could have different plans. One, for example, one for epidemics, such as what we mentioned, one for critical illness. Then you can choose whether you want to separate man and woman, depending on the cultural acceptability of the separation in different places. But if you speak about COVID, you can mix everything, and it's good for the man because the men are dying more than the women. So the woman will be paying more than the man if it's for COVID. That's a philosophical principle. Do you want to mutualize the risk against a very large community, or do you want to allow people to be in groups they relate more to? The age will be an important element as well in relation to COVID, because also the mortality is changing a lot to that. All right, I still had one more slide, so maybe this one is the last one. One very important element is a dashboard, give back information and transparency on what's happening. Second very important element is the claim approval to be simple and fast. So we put there a target of having a 90% of requests to be approved automatically. 10% meaning being reviewed by mediators, sending it back to voluntary members. And then you'll always have a number of a final part which will request maybe more investigations. So that's a 3 layers models that we could that will probably propose to someone we help to set this up. And then I know where my payment is going. Yes, I saw that this is something which works very well in China. Is okay, you're asked to pay for your community every 2 weeks for Alipay or others. But then they also tell you, this has been helping this person on a first name basis to maintain the anonymity. And this person is in this province, very wide geolocalizations, so that it's not possible to localize the person, but giving really a feeling to people that they know for whom they are giving the money when they are helping. So that it's personalized the element. It's you don't disclose personal data, but you give the feeling that you're really helping real people which is very different to I pay my premiums to an anonymous insurance. So I'll say that that's the kind of the key elements which we need to bring together.
So
yeah,
a question that I think brings, it kind of ties together some of the, you know, it's a very, very different model, P2P. And I think it's not a case of an insurer going with a ready-made product that clients either buy or don't buy. It's more a case of the communities, the members of the insurance platform of the P2P scheme saying, we're worried about this type of risk, and it's that type of risk which makes it a community. Would that be correct to say? So the members could, in a sense, essentially, they would create bundling by saying, I want to be part of the health risk community. I want to be part of the COVID-19 community or credit life community, or whatever. Credit life's probably a bad example, but is that correct to say that it's because it's coming, the need is coming from the community? They were essentially voting on what risks they are worried about.
So in the township models, which I rolled out in China a few years ago, we had a very, very strong elements of allowing people to shape the product and to discuss about what are the choice in coverage, extending or reducing the coverage as it goes. So that could be something which is fascinating in terms of a more democratic base, if you want to say so, model of insurance where the insurance coverage is really shaped by the community. I still believe that that's something which is really interesting, but I shall say, however, that that's not the approach which has been adopted by the biggest community today, the biggest critical illness community today, where they have been putting more emphasis on the community rules element in terms of deciding whether the claim are accepted or not, but they have put less emphasis in terms of the groups can decide what type of product they build. So you can have both approach. The self-definition of the product is really a fascinating one, but of course that's something which is a bit more heavy to animate, and it's suppose that you have strongly involved members in to be able to shape it in something which is significant for the community. So it depends on the level of risk educations and willingness to engage of the community.
Right. Well, I see some scope for potential innovation here that could bring together consumer research of the kind that Rishi's referring to, that they've been doing in rural and agricultural populations, questions about bundling, the types of risks. We haven't, of course, had time to answer all the questions that have come up, but just to remind everyone on the webinar, the recording will be made available. We will endeavour to answer outstanding questions by email in the coming days. There'll also be an article on the topic in our next newsletter, which will be coming out later this week, so look out for that. And we look to you, our members, to guide us in terms of whether you'd like more information about peer-to-peer and its applications, how the model works, what some of the key questions are around it that we could potentially produce as a discussion paper later in the year. So Tang, thanks so much for your time and for the very innovative thinking that you and your team are doing. Also for putting together this wonderful work on collating the information around the responses to COVID-19. And without further ado, I'd like to wish you all a very good day, a good rest of the week, and continue in good health. Thanks so much.